Welcome back to Investing Talk podcast. Today, we're going to be taking a look at Osisko Gold Royalties.
Okay.
It's a Canadian company that's in the precious metal royalty and streaming business, and we got a ton of information about them from you all. And we're going to try and break it all down so you can really get a sense of what this company is all about. We're going to explore their business model and how they've been performing recently. We'll take a look at their financial health. And of course, we'll look ahead to see what the future might hold for them, all based on the information that you sent in.
Sounds good.
Think of this as your own personalized briefing on Osisko.
I like it.
So to start with, let's just get the basics out of the way. What exactly does Osisko do?
Well, they acquire and manage precious metal royalties, streams, and other similar interests.
Okay.
So basically, they invest in mining exploration companies, and then they generate revenue through a bunch of different ways. Royalty payments, net smelter returns, and precious metals streaming contracts. Their main products in terms of revenue are gold, silver, and diamonds from the mines.
Okay, so they're not actually out there digging up the gold themselves.
Right, they're more like the investors backing the folks who are doing the digging.
Interesting. So they're kind of betting on the success of these different mines.
Exactly, and that's where the royalty and streaming part comes in. They're essentially providing upfront funding to these mining projects. And in exchange, they get a percentage of the future production or revenue from those mines.
Okay, so that's how they make their money.
Yeah, it's a way to get exposure to the precious metals market without having to run the mines themselves.
Makes sense.
Less capital intensive, for sure.
So let's talk about how they've been doing lately. From the information you sent in, it seems like they're doing pretty well.
Yeah, 2024 was a big year for them. They hit record annual revenues.
How much are we talking?
$191.2 million US dollars.
Wow, that's huge.
And their operating cash flows were through the roof as well. Those hit a record $159.9 million US dollars.
So that's a really strong financial performance.
It is. And while we don't have specific monthly stock prices, the overall picture from the last 6 months and the past year is pretty stable. And it shows that they're moving in a positive direction.
So what do you think might have caused these record numbers?
I mean, it could be a few different things. Maybe some of the mines in their portfolio were just producing a lot more. Maybe the prices of gold and silver were up during that period. It's also possible that some of their recent acquisitions started bringing in significant revenue earlier than expected.
You also sent in some info about their overall financial health beyond just revenue. And although we don't have the exact numbers for net income and EPS, those impressive operating cash flows definitely suggest that they're in a healthy place financially.
I'd agree.
And their focus on cash flow generation implies that they're probably managing their debt pretty well too.
Yeah, having strong operating cash flow gives a company a lot of flexibility.
In what way?
Well, for one, they can reinvest that cash back into their existing portfolio. They can also use it to go after more acquisitions and expand their assets even further. And they could even potentially return some of that value to shareholders through dividends or share buybacks. It's a good sign of financial strength and gives them a lot of options.
All right, so now let's take a step back and look at both the strengths and the potential risks associated with Osisko.
Sure.
Based on what you've all provided, some of their strengths seem to be that strong cash flow we talked about. The record revenues, a diversified portfolio of royalties and streams, meaning they're not overly reliant on just one or two mines. And of course, those strategic acquisitions that are helping them grow their asset base.
Diversification is super important in this kind of business.
Why?
Well, the mining industry is full of risks. You know, a mine could run into some unexpected geological problems. They could have operational hiccups. And then, of course, there's always the risk of commodity prices dropping. So if all of Osisko's revenue was coming from just a couple of mines, any issue with those mines could really hurt them. But having a diversified portfolio helps spread that risk out. If one mine isn't doing so hot, the others can help to balance things out. And those acquisitions they've been making not only bring in more revenue streams, but they also help to diversify their holdings even more over time.
On the other hand, there are some risks that come with this business model. Like we said, Osisko's performance is directly tied to how well those mines they're invested in are doing.
Right.
And the fact that gold and silver prices can be volatile, that can definitely impact their revenue as well.
Yeah, if a big mine in their portfolio suddenly had to shut down, it would directly impact the royalty or streaming income they were getting from that mine. And if that mine was a major source of their overall revenue, it could really put a dent in their financial results.
What about the gold and silver prices?
Well, if those were to plummet and stay low for a long time, it could make those mines less profitable. which would likely mean lower royalty payments for Osisko, especially since a lot of those payments are based on the value of the metals that are produced.
So it's important to compare Osisko to its competitors to really see where they stand.
Absolutely.
You gave us some info on Franco-Nevada, Wheaton Precious Metals, and Sandstorm Gold. And it seems like Osisko's competitive advantage might lie in its strategic acquisitions and that diversified portfolio we were talking about.
It's interesting, right? Because they all work in the same sector, but they each have their own little niche.
So what are the differences?
Well, Franco-Nevada is the biggest player. So they offer a lot of diversification and might be seen as a more stable option, though their growth might be a little slower. Wheaton, on the other hand, is really focused on streaming agreements, so they're more directly affected by changes in commodity prices. And then you have Sandstorm Gold, which is smaller but growing quickly. They're mainly focused on gold royalties, and they're trying to increase their cash flows. Osisko, with their strategy of actively pursuing growth through acquisitions, well, it's a more dynamic approach, but it also means they have to be really careful about which acquisitions they go after.
So for someone trying to understand where Osisko fits in the bigger picture, what does all this tell us?
Well, it shows you the different ways companies can approach the royalty and streaming space, and it highlights Osisko's strengths and potential weaknesses compared to its competitors.
It sounds like market sentiment around Osisko is mostly positive,
It is.
especially because of their strong operational performance and all those strategic acquisitions.
But the analyst ratings are a bit mixed. Some are saying hold, and others are saying buy. It's something to think about as you're forming your own opinion.
What do you make of that mixed sentiment?
Well, it probably reflects the fact that the market can be unpredictable, and analysts often have different timeframes in mind. The high profitability ratings likely mean that analysts see how much Osisko is currently making from their existing assets. But the lower valuation grades could mean that some believe the current stock price already factors in that profitability. And the lower growth grades might indicate that while analysts expect future growth, they don't think it'll be super fast compared to other investment opportunities.
So it's good, but maybe not amazing.
Yeah, and that mixed sentiment basically means that while the company's doing well right now, there are differing views on its future growth potential or its current valuation.
Now let's dive into the technical stuff a bit. You gave us some data on Osisko's recent stock price movements, and it looks like their current price is around $20.93 USD, or $29.96 Canadian. Over the past year, the prices ranged from $15.12 to $21.30 USD, or $20.67 to $30.46 Canadian. There's been a dip in price lately, and the trading volume is lower than usual. For those of us who aren't experts in technical analysis, what can we learn from this information?
So that 52-week range gives you a sense of how much the stock's price has fluctuated over the past year. A wider range means more volatility.
Okay.
Now, the recent price drop and that lower trading volume could mean that the stock is in a period of consolidation. Basically, there's not a lot of strong buying or selling pressure right now, so the price is kind of taking a breather while it figures out where to go next.
Interesting. So it's kind of like a pause before it makes this next move.
Yeah.
What's also interesting is that the short-term moving average, or the 50-day moving average, is higher than the long-term moving average, which is the 200-day moving average. And this can sometimes indicate a potential upward trend.
It often does. And that long-term moving average can act as a support level, which suggests a stable long-term outlook.
Can you explain what a moving average is in simple terms?
Sure.
And why do investors care so much about the relationship between the 50-day and the 200-day moving averages?
So a moving average is basically just a way to smooth out the ups and downs in a stock's price. You calculate it by taking the average price over a certain period. In this case, 50 days for the short term and 200 days for the long term. When the 50-day crosses above the 200-day, it's often seen as a sign that the stock is gaining momentum in the short term, which could lead to a longer-term upward trend. And the 200-day moving average is often considered a key indicator of the overall long-term trend.
What about that term support level?
It's basically a price point where a stock has historically found buyers. It's like a floor that prevents the price from falling further.
So if the stock dips down to that support level, people are more likely to start buying again.
Exactly.
Okay, last but not least, let's look ahead to the future. What are some potential catalysts or events that could impact Osisko's performance moving forward?
We'll keep an eye out for their earnings reports. Any announcements about dividends? And any news about potential new acquisitions or partnerships they might make?
Are dividends a big deal for Osisko?
They do offer a dividend yield somewhere between 0.89% and 1.10%. So for investors who are looking for income from their investments, dividends can be a pretty important factor.
So what should investors be watching for in those earnings reports and dividend announcements?
Well, strong earnings reports would confirm that the company is in good financial shape and that they're running things efficiently. And dividend announcements are always interesting, especially if they increase the dividend payout.
What about those new acquisitions or partnerships?
Those are definitely signs of potential growth and expansion for the company.
You mentioned risks earlier. What are some of the main risks that investors should be aware of when it comes to Osisko?
Well, the volatility of precious metals prices is always a concern, and then there's the regulatory environment for mining operations. Any changes in regulations could impact them.
What kind of regulatory changes are we talking about?
It could be anything from changes to mining laws in the areas where Cisco has interests, to stricter environmental regulations that could make it more expensive for the mines to operate, or even changes to tax policies that affect the mining or royalty and streaming industries. All of these things could potentially impact Cisco's profitability and their outlook for the future.
So based on everything we discussed today, what's the overall takeaway for investors?
Well, for people who already own Osisko stock, it seems like holding on to it might be a good idea, especially given their strong financials and their plans for growth. But it's important to remember that this sector can be volatile. Now, if you're someone who's looking to get into gold royalties for the long haul, Osisko could be worth buying, especially because of their diversified portfolio and how well they generate cash. But you got to have a positive outlook on gold and silver prices, and you need to be comfortable with the ups and downs of the market. It's also crucial to stay up to date on market conditions and any company announcements.
That makes sense.
It all comes back to aligning your investments with your own personal goals and your risk tolerance.
To wrap things up, the information you all sent in paints a pretty clear picture of Osisko Gold Royalties. They've got strong recent financial performance, a well-diversified portfolio, and they're actively pursuing growth in the precious metals royalty and streaming sector.
Right.
But just like any investment in this area, there are risks involved that are tied to commodity prices and how well those underlying mining operations perform.
And the fact that analysts have different opinions and the stock price has been moving up and down recently, well, it just emphasizes how important it is to keep researching and staying informed about what's happening in the market.
I think what really stood out to me was Osisko's strategy of growing through acquisitions.
It's a bold move.
Hmm?
But it does come with both potential rewards and risks. I mean, they're essentially tying their success to the performance of all these different mines, and they have to be really good at integrating those new assets into their portfolio.
This deep dive into Osisko Gold Royalties has really shown how important it is to look at a company from all angles. We've talked about their business model, their financial health, how they stack up against the competition, and even some technical indicators. We hope that breaking down all this information has given you a better understanding of Osisko. What are your main takeaways from this overview? What other questions do you have now? We encourage you to keep learning and researching. And if you found this deep dive helpful, please consider subscribing, liking, and commenting. It really helps us create future deep dives that are relevant to you. Thanks for listening to Investing Talk Podcast.